What is the market doing? And so, as always, I like to look at the market through lenses of math, of what are the mathematical levels that ideally will give me better win rates, or at least tell me what's going to happen. And so, with that is something that I use called the Bollinger Band indicator. And again, it shows you right here where 95% of the trading should be, and that should be in between this red and green band. If it's outside of that, there's a 5% chance that it will continue to stay out of it. So there's a 95% chance that we bounce back into it. And so the market is just like a rubber band. The second you pull it too far, it's going to snap and break and come back. And so, again, that's what we saw here. We really quickly broke through this bottom range, and then we saw a quick recovery. Now, you might be saying, well, Austin, now it's just news, Trump did whatever. Yeah, I still think that everything is shown through this math, and that 5% of the time we're going to be below here. And so we did get that snap back. We tried to pull back on Thursday, and then Friday we now have bulls stepping in just a little bit. I would still say we're not completely sure on the bullish route, but what we are showing is that this is, like, for now at least, this is the bottom, right? This is where we're kind of plateauing at, which is why I said if you give, at least I said this last Friday, if you give the market just a week, volatility will slowly start to decrease with people just getting used to this momentum, used to this crash or whatever you want to call it, and then it will slowly start to come back up, and then you'll see your positions recover dramatically. And if you want to exit a few at a small loss, you can, and then let the other ones run on. And so, anyways, the market looks like it's capping out to the downside. We'll see. We'll watch it from here. This again is my zone that I'm watching for support. If we stay in the zone, we'll be fine. If we start to break underneath, then we're going to be breaking down a lot lower. Probably unlikely though, since we don't typically just crash straight down below it. But anyways, my guess is over the next week or 2 weeks, we're slowly going to form this bottom, maybe come down a bit more, maybe bounce, just kind of form a solid base here, and then slowly start to make our way higher again as everything just happens here in the market. And so that's my general 2 cents. Could be right, could be wrong, but what we're looking at here is the fact that it's bouncing is showing that this level is something that will be a support or is a support. So that's what we're watching out. These are the drawings from last week. You can kind of see here how we had the bounce play idea. That's kind of coming to fruition. Now, one last thing I wanted to break down here is VIX. So if you see VIX here, even though the market is way down compared to where it was just a week or two ago, VIX has declined, and that's because people get used to the idea of we're in a crash. When a crash is new, that's when fear is the highest. When people are like, okay, cool, this is our new, right? Then that's when VIX starts to decline a bit, and this for sure has helped ease some of the pain on any positions that you're holding. Anyways, just my thoughts on the market. Hope that makes sense. Going to open it up to questions. Feel free to put it in the chat box or turn your mic on. Either way, we got a good crowd here today. We have Eddie, Fred, Ira, Kevin, Omar, Trone, Vera, and William. Anyways, how can I help you guys out? We got the chat box. We got the ability to unmute yourself. If there's nothing, I will fill in space and time, but I want to make sure that if you had any questions that they get answered today.
Austin, can you show the VIX chart once more time? Like, what are your thoughts on like VIX contracting more or expanding or market?
Yeah, VIX.
No, it's already contracted, but where do we go on VIX from here? Like, do we,
Yeah,
I
so I
think
mean,
we
if
have
we're
a
just
product called volatility on volatility, right? I don't know if you use it or not, but like,
Yeah. Um, when I look at VIX, as all things, I like to look at what did history show us. And so if we just take a look at the last, what is this, since 2008, which was wild here. You can see here how we just slowly trudged up. So we had our up and down days with slow trudge up. And then again, we kind of broke back down. But that's not really what we're looking at here right now. We're looking at more of something like this. And I say this because we had a huge spike up, then we had a red, and then now we really don't know where we're going from here. So if we stay in that support level that I mentioned on ES, you'll probably just see VIX hang around here, which is obviously good for option sellers who aren't in positions yet and are trying to get into them, because then you'll see this slow decline. But typically, what you see is you see a huge push up in VIX, and then you see it slowly start to recede. It's not typically in an overnight pullback or to say an overnight crash in VIX. It tends to be a longer process in which VIX comes down. So you have a huge spike, then you have like that red reset, and you slowly start to taper off to the downside. And so again, you can see the same thing here. We just that tends to see what happens with crash. They spike up. You have the red day of the major resetting, then the slow taper off. And so if we keep that idea in mind, that's I mean that's always my thought when it comes to VIX, as well as really that far back. As we had the push up, we had the red reset, and so now we're just going to slowly, um, you know, come down like this. Just my thought though.
Yeah, let's hope so. Thank you.
Yeah, yeah,
Austin,
yeah. Go
I have
ahead.
a I have a question related to this. So I know that the exchanges use Vega to calculate what the premiums are. So here we're looking at the S&P VIX chart, volatility chart. Is the chart we're looking at right now the most accurate um, kind of um, information we have on what the Vega information is that the exchanges use for their calculations? Is this essentially the same, or is there something a little more accurate than this?
Yeah, so the Vega calculations aren't really derived based on VIX. VIX just shows us the overall fear in the market, or just how much things are moving, essentially. But Vega is is calculated based on the options, as in
Right.
like like the spread difference, the delta changes and things like that, is what it's more calculated on. So if you want to understand Vega better, then you'll look at more of like the IV rank per asset. So aka the actual volatility of a certain asset. So SPY's rank versus looking at another stock or something like that instead of VIX, which just shows the overall market fear index.
For the market, I see, yes. So I noticed that when I do look at some of the information for each of the options, there's something like IV percentile. Is that essentially what I'm looking at? And that would be anywhere from 0 to 100. And the closer to 100 it would be, the higher the Vega would be for that particular option contract. Is that correct?
Correct.
I see. Great. Thank you.
Yeah. Awesome. Yeah, that's a good question. Yeah, so VIX, we just look at it because it's just a great way that shows the chart version of volatility, of fear, of movement in the market. But if you're looking at a particular asset, specifically when we're talking about like stocks, you are able to see the IV. So it's either called IV or it's called IVR. IV stands for the implied volatility of that asset. IVR is the ranking of the implied volatility, so implied volatility rank. Both of those just show you how volatile that specific asset is, and then that's kind of how you understand Vega for that exact stock.
Great. That's helpful. Thank you.
Yeah. Yeah, so a lot of option sellers who call themselves product agnostic, which is very much of a Tasty Live thing, which is where they don't care what asset they're trading. They're just going to sell options on whichever stock or whatever asset has the highest IVR. So AKA whichever stock has the highest volatility or movement, VIX, Vega, whatever. Well, I'm going to say Vega, not VIX, Vega for that asset. They want to sell those options, knowing that when Vega is high, when volatility is high, the chances of it pulling back is very likely, and so they're selling options and waiting for Vega to come down, and then they're making money from that. So there's a whole host of option sellers who just look for which stocks have the highest Vega, or I should say IVR. Cool, cool. Awesome. Yeah, let's see, we got something in the chat. 3-4 calendar bot is buy at the money best, or what setting is best? Yeah, so the 3-4 is your buying at the money and then you're selling the next day at the same strike price, which is essentially at the money as well. Those bots are more of a debit type trade. Um, I should say they do better in these markets. And so that's the 3-4 bot. If you have it open, you're probably seeing it do well. But yes, if we're 3-4 is an at the money for the best one. So the way that you structure that on the options auto trader is you just say amount out of the money and you do an ATM for at the money. And then the next like below it would be so that'd be the first one. The next one you would just click on same strike as the strike offset difference. Cool. Any other questions? See, we have Eddie, Dawn, Fred, Henry, Ira, Kevin, Omar, Trone, Vera. Yep, sorry, it's taken me so long. I've been been trying to work on some of those features, released a lot of incremental improvements to some things that Patrick, our great support guy, has been getting some small feedbacks on, so things just to make the software easier to use, which is great. But I also have the bigger task that I'm working on, which I thought I would get done quicker. Hopefully, it gets done next week. Of linking bots, I know that's kind of one of the number one things I want to do, and then also from one of the what do you call them, polls that I did in Discord is also the strategy is something that people really want to implement as well. And so that's also the next big task I'm taking on after bot linking. So I look forward to those two features, and I hope you guys are looking forward to that too.
Austin, just a quick question. So it might not be quick, but
Okay.
so in December, I initially started back in December, and then I think I had like 10, maybe closer to like 14 MES positions open week to week, and then March 13th or whenever that initial, I guess, the market went down, so I closed a bunch of them. So I had a loss of about, I think I had like a loss of 3,000, and then I just have two basically open June and July MES positions. The bid and ask are pretty wide. I was thinking of closing them last Friday and Monday just with the volatility, but I just held off because two positions isn't so bad. I'm using like a $30,000 account on Tasty.
Yeah.
So I just left them open just because it's two positions instead of 14 that I had way before. But I guess just going forward, is there any way to like, I guess that you recommend just small strategies to get like, I don't know, like 50 or 100 a week? Like, I don't know what's reasonable just to use that buying power. And I know you can't, I know it's hard to like say, like, I don't want to, maybe I just do the spreads on ES then. Because MES is just like even the June and July ones, the ones that I have open, I don't even know how I'm gonna like close them. Basically just because they're so wide apart currently.
hmm Yeah, MES has been terrible this year. Last year it was great. It was liquid. It was tradable. But for some reason this year there's like no volume trading in it. So those bid ask spreads are quite large.
Okay,
Um,
I'll manage them. Like if
yeah,
depending on what the market does over the next month, I might try and roll them possibly. But I guess just for new positions, do you suggest using like maybe ES and then just setting the stop loss to like 500 or something? Like maybe obviously you
yeah,
can't tell what direction the market's gonna go, but um,
yeah.
or
So
maybe like call, maybe you sell like the upside, um, go the opposite way,
mhm.
short the market. But
Yeah, so with that, yeah, obviously I'm a proponent of moving to a more liquid asset, that being SPY or ES. And so SPY and ES, though, when we're considering them, they're both going to cost about the same depending on the strategies you're doing, and ES will obviously
yeah.
have a greater return. And so if you want to go the ES route, which I'm always a proponent of, I like futures options, then that's why we have defined response here. So it's basically taking what you're already doing, whether, sorry, I guess I never asked what's the strategy you're doing? Is it like a 1-1-2, a 1-1-1, just short put?
Yeah, that's what I was doing, just a short put
Okay.
on, yeah, MES undefined. So I guess maybe that's the reason why I was having such a big loss before.
Yeah. So then just doing this. So take the ready, steady, retire, which is our no, that's not that one. It's this one here, the kiss spot, which is our short put, and then just define the risk. And so AKA that just means buying
Yeah.
further out. But you're doing so in a way that like it's not like you're not doing a very tight spread. It's actually quite further out. That way,
Hmm.
you do define the risk. It takes less buying power, but you still have a chance to make a decent profit. As you can see here, um, you're looking at about on average a $414 profit per trade over the last 10 or so years. Um, and so that just helps because you're also, decreasing the amount of money it takes. Because when you move to ES and you do a short put, well, now it's like 7,000 per trade, which ideally is too large for a 30,000 account. But when you define the risk, you can take it down to like 3,000 or so. Does that make sense?
Got it. Okay. Yeah. No, that's helpful. Yeah.
Yeah. So
I'll
for
take that into account.
this one here, sells the 10 delta, which is the delta that we like selling, and then it goes and it buys one at the 3 delta. Um, so about a 7 delta difference. And again, you can change that delta that you're buying depending on how much buying power you want to use. So the closer, you bring the 10 delta and the other one together, the tighter your spreads, the less money you have to put up. Also means the less profit you make. But it just depends on what you want your risk to reward to be. You're kind of just controlling that yourself.
Yeah, more guaranteed, I guess. But I guess just with the market, I guess just with, the Trump just saying whatever he wants every day, I feel
Mhm.
like maybe even short term, like selling short term options might be a strategy as well. Just that way I guess sort of what's happening week to week versus like longer dated ones. But I don't know, that's just what I was thinking, but
Yeah, I mean, if you go that route, I would just say make sure you have your risk defined. I personally always love going out further
the
in
longer,
time just because it
yeah.
it gives me, just a higher win rate because who knows what's going to happen in the short term. Um,
Yeah. Both ways, I guess. Yeah.
yeah,
Yeah. I mean, this is more proven, right? Longer term,
yeah,
the longer term ones. So
yeah.
yeah.
I'm trying to get an example here. Let me move my um, Yeah, if I'm just quickly perusing the options chain here, if you're going about 100 days out and you're doing a short put at around the 10 delta, that's at the 4,200 level, which is crazy. So if I come here,
Yeah, at this point, that would probably require intervention, hopefully, before it gets there. But
so the good part about higher VIX is that you get to go out further, which means your win rate's higher. Um, and that always helps as well. So yeah, I mean, obviously you would intervene before then and you have your defined risk to help cut off that when you do your defined risk that way, but still looking at you would need a 22% drop to even get near that strike. And so after a
yeah,
drop already like this would probably be in, I don't know, the Great Depression era. But anyways, it could happen.
yeah. Okay, no, that's helpful. Appreciate it.
Hey Austin, I
Yes,
just
sir.
opened up a Tasty Trade account, and how do I get to the paper trade on the Tasty?
Yeah, so Tasty Trade itself does not have a paper account. Um,
Oh, okay.
Yeah, so you can't paper trade through Tasty, but if you have your Tasty Trade connected to the Options Auto Trader, then we made our own paper trading system that we let you use. Yeah,
So so on the auto bot, there's a paper trading account for Tasty Trade.
correct.
Is that
Yeah,
what you said?
so yeah, if you connect a live account, whether it's Tasty Trade or something else,
Right.
yeah, you can use our paper system, so you can test all your bots with fake money.
Okay, thanks.
Yeah, of course. Yeah, so you'll go here up in your profile image, click on connect your broker. You'll be able to create your broker connection with Tasty Trade. Once you do that, we automatically create a paper account for you. But if you want to recreate one or have another one, you can. And then in here, I named mine demo, but you'll be able to see that you'll have a paper count in the listing. It'll say paper. And then you'll just click on it, and then you can set up all the bots inside that account, and it'll be able to paper trade anything you want for you.
Thanks.
Yeah. Pretty sweet. Let's see, how else can I help? Am I missing any chats?
Hey, Aston, any update on the future options for Thinkorswim or Schwab?
Yeah, no, I reached out to them. I must have been late last week, maybe Thursday or Friday last week. Yeah, and they still told me we don't have an update nor an ETA. And I'm like, oh, great. Yeah, no, as soon as it's a thing, it will be built in.
About the Tradier?
Tradier, I'm still in the works. Tradier doesn't have a direct integration. You have to go through StoneX or something, which is I forget who they use exactly. Um, but yeah, that's in the works as well.
Okay,
Because
thank you.
because yeah, so we unlike Thinkorswim, which I have no idea when it's coming, I do have approval for Tradier futures. It's just the integration process, which I was going to do after bot connections and then after wheel, then I was going to go to the Tradier futures.
Thank you.
Yeah.
Fidelity doesn't do futures either, right?
Well, yeah, but Fidelity also doesn't allow any connections at all.
Oh, okay.
So, but yeah, you're right. They don't do futures. Awesome. Well, what's been you guys' go-to strategy? I know we could probably some of you guys using some more zero DTE or buying options, but I'm curious what's working out there right now.
I turned off all my zero DTE options unless other than the paper trading, and I
Okay.
see from the April 3rd, all the paper trading was like red, red, red. So
Yeah.
I did good. So not zero DTE doesn't work great on when you have uh, this much volatility. Yeah.
Yeah, it's moving a bit too much. Yeah, especially when you do, that's when you have to like adjust it for stuff because typically we just do $20 away, but it's the market's moving too much to do that, just that.
On that note, another question on 112s, when is a good time to take the hedge away? Like I know the max the hedge can make is if you talk about ES, like 50 points, which is like
Mhm.
2,500.
Yeah.
So the past 2 days or when this happened, like it almost came to 2,000. So the max that left on that would be like another $500, like irrespective what happens. So what would a good strategy to when is a good time to take? I mean, like hedge is like you keep it on like that. So even though you take the uh, happy path, like is like, okay, if you get 80% of your two naked birds, you close that and leave the hedge on so that it would be useful or it will be hedge like for the other positions. But like, okay, this is like almost kind of a situation of a max loss or something. So it almost the max you can make on that hedge is 50 points, which is 2,500. So in this volatility, when it came down, it almost came to like around 2,000. So the hedge, the left out money in the hedge is another 500. So what is the best strategy to take it out? Like if we wanted to take the hedge away rather than the naked puts, because already naked puts is underwater. So first of all, is it a good thing or not? Or if so, then when is a good time?
Yeah, so that's a great question. It also comes down to what each person wants to do. But from an opportunity cost perspective, once you hit around 80%, which is why we close the naked puts around 80 to 90%, just because the amount of time left in the trade versus how much profit there is left to make, it just isn't worth it. We can take our money and put it somewhere else that's better. So it's the opportunity cost of that is the same thing with the hedge. Once you're, around an 80 to 90% profit on your hedge, sure, it's still providing some downside protection, but not much more because you've exceeded what you're going to be able to get from it. So you might as well close that trade, take that money, and depending on what you want to do, but use a portion of it to get into a hedge that will then protect you further to the downside. So yeah, once you hit about the 80 to 90% range profit on that, you kind of exceeded the max profit you'll ever get for it. And so it's just from an opportunity cost and money cost perspective, typically best to close it and then use as ever much of that money as you want that you just made to put into another hedge.
That's a good idea.
Yeah.
Thanks.
Yeah. And of course, you don't have to use the whole profit for the hedge, but at least a portion of it if you think the market might continue to drop.
Well, you know me, Austin. I'm an old DTE guy.
I asked that because I had a feeling you'd talk up.
Yeah, I'm pretty much just old DTE. I do a few. I've done some hedges, SPY hedges. I had one I put out there just earlier in the week, and I think about Monday it was, and we had some of those swings. It was a May hedge, and overnight it made me $600, so I just sold it.
Yeah.
So I'm getting ready now to take a look and do some hedges, and probably in the September to kind of get me through the summer. But my ODTE, I'm pretty much putting a trade on about 10:01 in the morning. I look at the VIX, and I let I think I mentioned this to you before. The first two 15-minute candles, I wait until I see which way the VIX is going, and then the VIX is going up, then I'm thinking the market is going to go down. So then I will sell puts, put spread, and then I take the implied volatility and whatever the market makers are saying it is, and then I'll add that to the price or subtract it from the price, current price, and then that'll be the spread I will put on, and it'll be $1 spread. It's working pretty good.
Yeah.
About 90% success rate.
Nice.
Sorry if you don't mind, Don. So you see the first two 15-minute candles on VIX, and if it is going up, you think that market is going down, so you put a put spread.
Yeah.
So when you say put spread, you'll sell a put spread? If a market is going down, put spreads don't make money, right? The call spreads make money.
Well, I first look at the implied volatility of what the market makers are saying. And let's say it's, here lately it's been like 12, 14. But on a normal day, it's, 2 or 3, or 4. But anyway, then if I'm going to sell a put, then I turn around and subtract that off the price, and that's going to be my put price. And then I sell the put, and then I turn around and buy $1 wide. I sell a put, and then I buy a put $1 wide at that price. So.
Okay, interesting.
And then you're usually getting somewhere around 20 cents a contract. So I'm buying.
Your max profit will be 20 cents.
I'm doing it with XSP.
XSP, okay.
Yeah.
So if you're selling a dollar wide,
that's a mini.
Okay. Yeah, if you're selling a dollar wide puts for 20 cents, so your risk is $80 and your profit is $20. Is that right?
Right.
Okay. That's good. Interesting. Good to know. Thanks.
Yeah, and I usually looking to make about $300 a day. That's kind of what I'm looking for. So if I'm looking anywhere from 20 to 25 cents a contract. That's kind of and here lately they've been about 20, 21 cents, and then I'll just crank up the contracts to hit my threshold over $300 or more.
Oh, okay. You do multiple contracts. Okay.
Yeah, I do multiple contracts. Yeah. Otherwise, you're looking to make $20.
Yeah, makes sense.
So.
Yeah.
Does XSP also have a commission like SPX? I'm sorry, Aston. Go ahead.
No, I was just gonna say, I assume you're doing that on your Tasty account, right?
On what?
I assume you were trading that through Tasty, right?
Yeah, Tasty.
Okay, cool. I just want to make sure your commissions are capped on that. All right, go ahead.
Yeah, that's exactly my question also, like the commissions. So we wanted to know like XSP, right? So it's not like how much the SPX is commissioned differently, but yeah, on tasty everything is same. So yeah, uh, that was answered. Thanks.
It's been fun.
Oh, gambling is so much fun.
Nerve-wracking. I just sleep better at night doing ODTEs. Although I've got some other trades that are on that are fairly short, maybe a week out. But I'm looking to, I doing some weekend trades.
Yeah.
I just did another one today on Boeing going into their, I think it's April 25th earnings call.
Mm-hmm.
So, and I also have some information to me, some scanner information that I've got that I could see some of these big, somebody placing big trades on these some of these stock, and so that will get my attention. Whether or not if they're putting in $1 or $2 million, evidently they know something that
Yeah,
I don't.
for sure. Yeah, those dark full order flows. Yeah.
Yep.
Sweet. Sweet. Yeah, but
Hey, Austin,
yes, sir.
I have an interesting trade to share with you guys.
Okay.
If you put up the SPX, the 5 minute chart,
Yeah. Oops.
you see a Bollinger Band?
Yeah.
Put a Bollinger Band so right at the 1540 mark, 1540, like 340.
Today
Yeah, today.
it's gonna be around here.
340, like, no.
Let me. It changes my time zone to UTCO. Oh no, that's
Yeah,
the right one. I don't know. Let's see. So that should be about
right,
18.
right there, right there. Oh, you pass it. Right there. So right there, you see the volatility has collapsed.
Yeah.
I went in and bought the iron condor, sold the iron condor. So I cashed out 95% on the trade they made. So
Mm.
I sold them $1.50. I was a little bit getting in. I was able to get in by two, but by the time you trade going through it down to $1.50. So it's a quick trade. I make some money on that trade.
Yeah.
So from time to time, I look for the collapse on the volatility. And at the end of the day, then I go in and sold the iron condor. It
Yeah.
works. So
Yeah. Yeah. That's cool.
not all the time though.
Yeah. Yeah, it's one of those strategies that works great until you have a spike at the end of the day and you're like, dang. I
Yeah. The last couple of minutes is like so. So I have like 20% loss, stop loss. So if you lost 20%, I'm out.
yeah.
But my profit is like 95%. So
Mm.
on average, if I win more than loss, then I'm good. But that's just an interesting. I'm not suggesting
Yeah.
people doing it, but that's something I try from time to time.
Yeah.
If I see the volatility collapsing, then I go in.
Yeah, and just to explain for those of you guys who don't fully know what he means by the volatility collapsing, is the Bollinger Band shows you how much movement is in the market. And so when you see these bands, these red and green lines slowly start to converge, come together, then you know that the momentum and the movement is slowing. Versus here at the end of day here, you can see VIX or I should say the bands are expanding or diverging. And so you know that movement is very big, and so you probably wouldn't want to enter on a day like that for trading this particular strategy. You'd want to wait to see towards the end of the day these bands come closer together, showing that the movement's slowing down. Yeah, yeah. Thanks for sharing.
It's just kind of fun trade.
Yeah.
You limit your loss, but you make pretty good gain. So
Mhm.
if your win rate is 60, 70%, you're doing pretty good.
Mhm. Yep, just plan
So
out.
so far I'm up $900 on that strategy on my account.
That's
Sweet.
great.
Awesome.
Winning is always more fun.
Yeah.
Yeah.
But the good thing about this strategy is I traded the very last 15, 20 minutes. So it's over in 15, 20 minutes. So
Yeah, that's good. In and out, right?
yeah, that's
Yeah,
it.
the adrenaline for 15 minutes.
I do have a question related to that, and this is for you, Eddie, and everybody else. Eddie, you had mentioned a 20% stop loss. I was in the discussion earlier this week regarding stop losses when we trade options, and the platforms that I'm using do not have not that I'm aware of, a stop loss option or a feature. Is
So
that?
are you using the bot to trade?
Oh no, I wasn't referring to that. I was just referring to the platforms. So most of the option trading
But
because
you
I'm
can't.
fairly new to this, most of the option trading platforms do not have a stop loss feature, do they?
Well, yeah, they do. You can put a sell limit at the price you want to sell it.
I see.
Then
Okay.
then you can stop you out. But the problem is Austin already mentioned that the market makers see your order, they manipulate the market, and most of the time the stop order got filled very fast.
It's
And I
usually
did
the
that to
bot
myself.
works
I can
well.
I can
The
see
bot
Austin
works better.
smiling. I can see Austin smiling when and Tone, you said that okay, most of the platforms doesn't have a stop loss for options. I can see Austin smiling. I know why.
The I found out the bot, Austin bot, works much better for the stop loss. You go in and when you hit the price, the bot will go in and close it out instead of stop order on the market. It works much, much better.
It's because the market makers can't see it.
Yeah, exactly. I like that.
Yeah, absolutely.
So the trade I did, right? I already had 20% stop loss in the bot. So say I sold it for $1.50. So say $1.10 or so, I'm out. So I risk very little, but
Hmm.
I can cash out the whole thing,
Right.
if it goes my way.
Yeah, so just
And the
just to get a
yeah,
better understanding for other people, do you have like the bot like pre-set up of like, hey, I want to enter based on these rules, and then when you want to enter it, you go to the bot and you click enter now, and then
yes,
manage.
yes, because that you cannot be a standalone strategy trade by itself, right?
Yeah.
Because you have to watch the market. I wait to the end of the day, you know, like today's day is a good example. Got a lot of ups and downs. So a lot of things already happened at the end of the 15, 20 minutes. That's not much going on, especially today. So I went in and make the trade. So so yeah,
How
when
wide
I
do you
see
go, Eddie?
the situation happen, you're going the way I want it, then I go click, make the trade.
Eddie,
Yeah.
do you go by the amount that you need, or do you go by a certain width of the iron condor? Like how wide do you go, and where is your put and call? Like, is it based on delta, or you just looking for certain amount of wherever you get that amount?
Oh, I don't quite understand your question. Say one more time.
How do you put your iron condor? Let's say that the one that you mentioned here, right? Today you said volatility is collapsing. So where
Yeah,
did you sell your put and where did you sell your call? And how wide is that?
right at the 1540 marks, right at the 1540 mark. If I can see, if Austin will put that marker on 1540,
Around here.
right here, right here. Yeah.
Yeah. What is your strikes? Strikes on the iron condor. What is your strikes on the put or call?
Oh no, if you on the bot, it's very easy. You just go do the 0 day iron condor, and you just tell it to execute it. It automatically set the
Oh,
strike
so
price.
so you're just using the default 0 DTE settings.
Yes.
Oh, okay.
And then I go in, I change the stop loss, my profit, and I tell it to trade. When I tell, yeah, I use the bot, and then and the condition is right. I just go click it and say, make that trade for me now, and then they execute it. So when I 20%, if I lost 20%, it's out. So, but if it go my way, then you just wait to the end to close. And when it get to like 95%, I close out the call because I don't want to be the last minute or two surge that kill my profit.
So if I understand this correctly, the Bollinger Bands must be converging in the last 15 minutes. You execute our zero DTE bot, which is plus or minus 20 points away. Wherever it's trading, it goes 20 above, 20 below.
Exactly. The
Um,
iron
Iron
condor. Yeah.
Condor. And then you're taking a profit at 90% and then closing at a 20% stop.
Is
Yeah.
that one of our default bots, Austin?
The way that it's structured, yes, but that zero DTE bot has no take profit or stop loss because it's meant to go all the way. And so
Okay.
he's added the 90% take profit and 20%
Okay.
stop. Yeah.
What's the name of it?
Oh, it's just our normal zero DTE.
The iron condor.
Oh, okay. There's
Yeah.
only one of them in there, right?
Yeah.
Yeah.
Yeah,
Oh, the
that's
melon
it.
door.
And then you can play around with the parameter the way you like,
Yeah.
Basically, use this
So
bot.
so it's the melon door, is that right?
Yeah.
Yeah. Okay. Yeah, I have it.
Sweet.
Zero DT iron condor. Yeah, exactly.
Okay.
Sweet. Well, I'm glad you enjoy having a stop loss. So it's one of the biggest reasons I built the software.
Yes, actually, your software helps a lot because in the past I have to go in and type in all those strike price. It's a pain in the neck, but now just click one click. Just all the strike price are all set and it's executed, so it's perfect.
Nice. And that made you how much about today, you said?
Today I only have two trades, so about 270.
Not bad.
Not too bad.
Not for 5 minutes worth of
For
work.
for 20 minutes.
Yeah, 20 minutes. Still okay.
Yeah.
How long have you been doing it, Eddie? I guess just with the current
The
volatility, have
I
you been doing
well, I've been doing it since I joined to join Austin's the bot because it make it so easy to execute. Because you can't do it manually. It's not fast enough. By the time you see you want to at say at 340, you want to enter the trade, things are kind of moving kind of fast. So if you try to manually enter the trade, it's too late. It takes too long. With the bot, one click is already in, so you don't have to worry about it. And also from time to I would call up the bot and I go to the setting. I would say generate preview, and I can see what is the premium that I can get. If it's too low, like 50 cents, I'm not gonna bother with it. But if I see a premium of $2, $2 and up, that's somewhere around $2 seems like the sweet spot. And you can click on it, say generate the preview, and you see what is going on. And it's like $2 good time to get in.
And have you been doing it, I guess, like over the last week, last 2 weeks, just with the market, or like you
Oh,
hold
no,
off?
it's too volatile.
Yeah,
No, I
yeah.
didn't do the last
Just
2 weeks.
wait till
But today I can see that everything is
yeah,
collapsing at the very end. Nobody gonna do anything at the end. Like
right.
if you want to buy, you already bought it. If you want to sell, you already sold them. So that's why the end is collapsing.
Yeah.
You have to
Last 20
use
minutes? Last 20 minutes, you said, sorry, or 15 minutes?
last 15, 20 minutes. Yeah,
15.
I think you said 340 today, right?
340, yes.
Yeah. Can you show
I
that
end up
blow that up, Austin? 340.
if you use a smaller 20-day Bollinger Band, you saw it better.
Something like this, you said?
Yeah.
Then
Yeah.
40 was right here.
This is a 5 minute, right? So four
Yep.
candle, yes. Right there, yeah.
You're
It's
looking
a
for the
fun trade. If anybody
sidewalls.
want to trade, yeah, I'm sorry.
Yeah, I just saying you're looking for the sidewall to
Yeah,
basically cave in.
Yeah.
cave in, right, exactly.
Only at the top or bottom too.
Well, I'm looking the top and the bottom to collapse together.
Yeah. Okay.
Okay.
It's a fun trade.
Yeah.
Yeah. Thank you so much for sharing it. I'm sure a lot of people here are gonna try it.
Well,
Yeah. I just got
give
to
it a
figure
try.
out when it's going to cave in. You know.
Well, sometimes you can tell like you have a big up day and down day at the end of the day. It's not going to
Mhm.
too much movement, yeah. But it's but your stop loss is only 20%. So, you know, if you go
Yeah.
your way, you can go up to so you make good money. So far I'm green on that strategy. So,
Good for you.
Awesome. Any other questions?
Yeah, on that strategy, what is the spread, on your
20 up, 20 down. Like
20 and 20? I got it.
Yeah, plus or
Okay.
minus.
so
Because I
so
just pulled up that zero DTE bot, and then like you're selling the 20 put, and then you're buying one 5 strikes below it. Is that correct?
yeah, you're selling the put and then selling the call, and
Right.
then you buy the put and the call 5 strike above or below it. So
Correct.
you're bracket in as long as it doesn't move 20 point more than 20 point above or 20 point below, you're good.
Okay. Okay.
So you got 40 point. You got like 40
And
point range, 20 point on either side.
you're
So what
normally
you think?
not going to get that spread at the very end of the day. Is what you're saying, right?
Yeah, but something you have to be careful. Though. I've been looking at the end of the day for a long time. At the last like sometime in the last like 5 minutes, you will suddenly surge 15, 20, 30 points. So but the
Okay.
bot will kick in,
Yeah.
get you
Right.
out.
Yep.
So
Kick you out.
that's why that strategy worked with pretty good with the bot. You can't do it manually because it's just too slow.
Not fast enough.
Not fast enough. Yeah, the bot
Yeah.
will actually watches it and then close you out. Sometimes you're close up more than 20% because by the time you get to it, it's already like it's moving. But it won't wipe you out.
Right. I'll have to paper trade that. Paper
Yeah,
trade
yeah.
that. See how
Try
that
paper
works.
trade. Yeah, yeah. Once you get when you see the pattern, you get familiar with the pattern,
Yep.
then your win rate going to be go up.
Okay.
Okay. Good. Thank you.
Yeah, you're welcome.
All right.
You
Well,
wonder if you just set an automatic to turn it
Well,
on, say at
you that
at
that's too
340, and then
risky.
is it?
That's too risky
Okay.
because if you look at the end of the day, most of the like at 340 or 345, something like that, there's a lot of time they got big surge, a big green candle going up.
Yeah,
So
you got
you
those
got to
institutions kicking in, or
yeah, those yeah,
I mean,
or
something to do though
the
is
ETF and everything, the mutual fund they're kicking in at 340, 345,
hmm
something like that. So you can't set it into automatic,
I mean,
but
something that you could do to get a lot of data so that you can make the selection better, as in just have a paper bot that's running at that time every day. And then so you build up a history of trades and you go, okay, how much credit did the winners have? and you can kind of narrow down so that you can like find your best entry.
Yep. Well, that's what I do now with, I've got paper trading running, and then I've probably got 15 of them running, and I'll look at which I have the most success with, and I'll put them in the live and run them for a while.
Nice. Yeah, that's the way to do it. No need to risk our own money with trial and error.
Exactly.
But kudos to Austin's spot. It's great for fast execution
Thank you, sir.
or for long-term trade. Either way you want to do it.
Either way, it depends on what floats your boat.
Yeah,
We need
exactly.
we need all the help we can get in this market.
Right.
Hey, Eddie, one more time, what asset say that you were trading that on?
SPX. You
SPX.
can trade them on SPY or the XXP either way.
Right.
You can trade all of them.
Okay, the
I
chart.
normally
But you
trade
got
on SP. I normally
but you
trade
got
on
cash
SP.
settlement for SPX though.
Yeah, X cashman. At 4 o'clock, you're done. You either win or you lost. If you're not out, you can't settle. If you if you wait till if you close out by itself, it's even better. You don't have to pay commission. Right? The commission is like 260 per trade for options, so you got four of them. So
Hmm.
so you save your commission if it go your way, if you don't close it all, you know. But I'd rather close it if I can make 95% because they'll avoid the last minute rush, last couple minute rush.
Right. That makes sense.
It's a fun trade. I can paper trade and have some fun.
All right. Well,
And
glad.
Don, in comparison,
What?
Don, in comparison to your strategy, you enter at the start of the day normally for your credits.
Oh, is he talking to me?
Yeah.
Yeah, Don, sorry. Yeah.
Oh,
In
yeah.
comparison to your
I
strategy.
put it on it. I put it on at 10:01.
Oh, okay, 10:01. Got it.
I let the two 15-minute candles, and then it's whatever the next candle does, whether it's above or below the first 15-minute candle, is when it gives me the. I actually wrote a script, and it prints a up arrow or down arrow, and up green arrow and a down red arrow, and of course I go the reverse of what that arrow is pointing. That way is the market trend, and then I turn around and take the market makers implied volatility and then apply that to the current price, and that's where I start my first strike. I sell the first strike and then buy the next $1 strike wide.
Got it.
So it's either a credit spread or a put credit spread or a call credit spread.
Got it. Yep. Depending on VIX or however it goes.
Right.
Yep.
And I think it works a little bit better when we don't have as much. VIX is so volatile.
Right.
If it's back down in the 20s, it's going to be a more solid trend. Because like today, the whole market just reversed. We thought I actually did a call credit spread, and you see what happened at the end of the day. I was a happy camper till about 1 o'clock or so, and I took 100% loss to get out. But good thing I did. I I lost like about 600 and some dollars. I could have had $3,000 or $4,000 loss, but I stayed in. Sometimes it's
Right.
hard to pull the trigger, but
Yeah. But I guess if you're doing about a couple hundred a day, hopefully it balances out in the long term, but you just never know, I guess.
yeah, right. So I figure if I lost 100%, I'm probably better off odd wise. Go ahead and take the loss and either go. Sometimes I go right back and take another bite of the apple and make it back.
Yeah. Revenge trading.
Yeah. But normally, if I've been in it, 3/4 of the day and I haven't made any money, probably a good omen just to get out. Wait till tomorrow.
Yeah.
Sweet. Well, that was fun. I love hearing other strategies. I'm not a zero DTE
Yes.
person, but I do know they're cool. And so I'm glad you guys were able to share that. Feel free to share in Discord if you guys want to talk throughout the week. You guys have access to each other there. Thanks again for joining. I hope to see you guys next Friday. We can talk all about this again and maybe share what's working then. All right, bye guys.
You see my cap, Austin? See my
I
cap?
do. Yeah, I was looking at it.
Remember, I got that from you probably 2 years ago or so.
Yeah, it was the beta testing hat. You got it.
Yeah, exactly. So, all right. Well, good to talk to everyone, and have a good weekend, everyone.
Yeah, thank you.
All right, thank you.
Thanks, Justin. Bye.